from an income standpoint, specific to home loans, there are a couple different things that come up. Child support is one, and spousal maintenance is another. And from a lending perspective, the lending guidelines will allow use of those two types of income, but there's rules around them depending on the home loan type that person is wanting to take out. So in general, if there's temporary orders that have identified, let's say somebody is paying child support, then if the lender can document that they have received that income, and it can't be variable, like a set income, for 6 months from the filing of that temporary, it doesn't have to be the final divorce decree, but it could be temporary orders, that would be enough that a lender could potentially use that for qualifying income, which many times people need. They need to be able to use the child support or the spousal maintenance to qualify for that home loan. So I just want to throw that out there and kind of have some conversation around it.
Yeah. Well, so I think the first thing that you noted, which is super important, is temporary orders. So like Josh said, if a case is taking 1 year to 3 years, if there are no temporary orders, then the case starts. There is kind of one status conference. We call it a resolution management conference, which is 5 to 10 minutes. And then you have your final trial. So that's it. So between, if your case is taken 2 years and if someone believes that they qualify for spousal maintenance, so income disparity between the parties, maybe it's a stay-at-home parent, someone that's disabled, someone that's been out of the workforce for a long time, they really need to get temporary orders set up as quickly as possible to kind of freeze that claim. And then, like you said, show that track record. Because then again, if the case takes another 1.5 years, well, you've already been getting temporary spousal maintenance for 1 year, 1.5 years. So that runway is going to be very useful there for you. But as far as child support and spousal maintenance, I'll let Josh talk. There was some recent changes in spousal maintenance guidelines and things like that about income. So I'll let him talk about that. That's still changing, and there may be more changes there, but I'll let Josh talk about that.
Yeah, so prior to this past summer, the way I explained it to prospective clients and clients as far as spousal maintenance is there was essentially 13 different factors under ARS 25319, which basically were the factors that you analyzed to the court at your trial. You said, hey, here's the length of my marriage. Here's what I did to sacrifice for my spouse while they worked. Here's I was a stay-at-home parent. Here's my education attainment. Here's my earning potential. Here's my spouse's ability to meet their needs as well as my needs. Here's the amount and duration I'm requesting. And then basically pleading to the judge, this is why it's fair, right? So it's essentially a 2-part test. One, like Michael said, whether or not you're entitled to it. And then if you are entitled, then the court goes on to that second form of analysis, for what amount and what duration. So prior to this summer, it was just essentially who had the better lawyer, who could put on the case better, right? Who had the better facts. So, and what was happening is, that same case, if you tried it before, 25 judges in Maricopa County, you're going to get 25 different answers and conclusions and response. So essentially us as family law practitioners, and then I know Michael's on the rules committee where he kind of changes these rules and makes the rules for Arizona practitioners. And with that, we came to, we need a calculator. We need some sort of guideline. And that's essentially what was created. And it came out in the summer, I want to say July of 2023, where we finally got it. And the court did go retroactive back to if your case was filed after a certain amount of date, then you can, be eligible for this calculator. But again, it's very complex. The way that the data was generated behind the calculator, it's very easy to put the information in. But if you're in Arizona, what I would just, advise you is go to, put Arizona spousal maintenance calculator, and then that'll bring up a court website. And then you can start to play with the numbers here and there based on how long you've been married, how many kids you have, what's the principal amount of your, mortgage that you have. Some of those things are factored in. And then there's a guideline, a low, a mid, and a high. So obviously, if I am the person seeking the maintenance, I'm going high, making that request. The other side, of course, would ask for low. And then what do you know? The court goes somewhere in the middle, right? So that's been really helpful. And then child support, there's been a child support calculator in Arizona for a while. It's the same type of thing. You can kind of log in there, show what your gross income is, your spouse's gross income, how many parenting time days are allocated to either spouse, who's covering medical, dental, vision insurance coverage. They get a credit for that. Is there child care involved? Extraordinary expenses. Those are some of the data points the court considers. Some are mandatory, some are discretionary. But again, that goes back to, who has the better lawyer to make those arguments. But it's interesting, Kelly, that you say, obviously spousal maintenance, that can be determined of an income for purposes of refinancing or getting approved for a loan. In Arizona, it's important to note that you need a duration in term of at least 3 years to be able to have a qualification for that mortgage, for that, financing. I'll let Kelly get into that. Now, what's interesting to me is that child support is considered or allocated as far as income when it comes to being qualified for a loan. Whereas on the eyes of the court, child support is just for the children. That shouldn't be something that you can utilize for expenses or a mortgage. So that to me is interesting. In that field, it's qualified in its income. But in ours, it's like, no, you could only use that for school clothes, this, that, so it's interesting how we see both sides of that coin.
Yeah, it is. And that 3-year continuance, let's talk about that because it's so important. And I see so many situations where people are just short of the continuance requirement. And this is across most home loans, if not all. And what I'm saying is that if somebody is receiving spousal maintenance and or child support, and it's a usable form of income for that home loan, the lender is going to want to document that there's a 3-year continuance to document receipt of that at the closing date. So if you're closing, let's say at the end of December, and maybe per that divorce decree, now you're only going to get spousal maintenance for 2.5 years versus 3 years, then in that case, it's very likely that income will not be usable income for home loan qualification. Same type of scenario with child support. One of the challenges from a child support standpoint that we run into when we're reading divorce decrees and based on the lending guideline 3-year continuance is the age of the child. So if they're 15 years old and they become adults at 18, and maybe the divorce decree says something like, we'll continue to pay child support while they're in college. Well, once they're 18, they can decide if they're going to go to school or not. And we get into all this kind of, gray area, and it just makes it more challenging. So in my mind, when we're consulting people and they're asking these questions, if they're going to be receiving child support with a child that's 15 years or older, in our minds, we're going to kind of err on the side of caution and not use that as qualifying income just because of that 3-year continuance requirement that we know we're going to have to document. Does that make sense?
Yes. And another thing too is child support. It's not something that is permanent. It's something that could be modified with the showing of a substantial and continuing change of circumstance. So, the way Arizona law deals with that is there's a calculator ran, the number is then inputted and it becomes a court order. And if there's an income change or a job change or somebody loses this job and that child support number is reran, and if that number is greater or less than 15% of your earlier order, then that's enough to qualify as a substantial and continuing change of circumstance. So it's not a huge burden, a huge shift to get that number changed. And if that number was relied upon to, for a mortgage or financing, that could be an issue as well. So I can see why the mortgage side of things, you wouldn't, you don't want to rely too much on that number.